Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thank you so much for joining this strategy webinar on the 20th of January. We're going to take a look at the charts very soon, but first of all, be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Please take a look at this link, select your country of residence, and contact an appropriate entity to find out more about that and other details and conditions. Also, please be aware that trading for exchange and global financial markets is considered high risk. It may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you're aware of the risk involved when trading. All right, I wanted to let you know about the fact that FX Street nominated Nenet and Admiral Markets for the best Forex content and analysis. They do this yearly. This is the 6th one, actually. So I think they started, I guess, in 2010 or 11. But let's see, 11, 12, 13, 14, 15, 16. I guess, yeah. So the voting starts tomorrow, Thursday the 21st, and ends 1 week later. And basically, you can cast one vote per person. And if you go through that survey, there will be about, I think, 8 categories. So if you don't know a particular category, feel free to skip that one. If you have a favorite, of course, go ahead and choose one. You have to finish it entirely before it counts and is considered valid. And if you don't finish it, it will not be counted. Nenet's Admiral Markets, I think, appears in question number 2, if I remember correctly. Let me check. Yes. And Nenet is nominated as the best speaker, and it's question number 6, Nenet Kirkes. Whereas Admiral Markets is nominated as best sell-side analysis contributor. So the reason why I'm showing this, obviously, we would greatly appreciate, of course, any votes from you or from any friends or families of yours, for that matter. So that's what I want to let you know. The link here, right there, I will copy that to make it a bit easier for you to access that. All right, so already many thanks in advance for any of your votes. Great. All right, in case you're wondering here, you can take a bit more look at Admiral Markets on the website. We'll do that right now, in fact. You can see here, just go to trading platforms. You can find more information about the Web Trader and the Supreme Edition. You see a video and a lot of information here about the difference what the Supreme Edition brings along when using it. All right, so all the details here, Sentiment Trader, Correlation Trader, can be found there. Regarding the calendar for today, we got an unemployment rate on a pound, some big pound news coming up. Some inflation rate for the dollar. That's going to be interesting, I guess. And also the Bank of Canada rate decision. All right. Regarding the volatility of yesterday's market, pound odd by far the number 1 regarding volatility and directional movement. Pound odd not doing that bad here, but there were pairs that even did more, like the pound to Swissy, for instance. So quite a lot of movement yesterday. Pound number 1, Kiwi surprisingly second here. Dollar still not moving much really. Quite low on these currency ranges day after day. It's really not the dollar that's not moving that much. And actually, if you look at, I saw some graphs on the dollar. If you look at those graphs, the bulls, when you look at fund managers, have really decreased a lot. They're at their low since I think the last 3 years. So the wind is kind of losing its track, or the wind is out of its sails. It's losing a bit momentum a bit with these managers. But I think it's just temporary. I still see the dollar strengthening later this year. So let's see. Well, let's go to the analysis now and take a look at the Forex market charts. Yesterday, I was very happy with the pound USD, as you can imagine. Beautiful fall, very impulsive. And yeah, that was just a great, I think, great trade to see. Good morning, Morton. Good morning, Beverly. Is there anyone who actually, I'm curious, who took that trade? Because we were talking about it. I hope so. It would be great if that's the case. Here we go. This is the dollar CAD. Let's take a look at that pound USD. So basically, price was at the 38.2 fib, and I was looking for reversal right at these at one of these fibs, 38.2 to 50 to 61.8. Price eventually hit the 50. It was either going to be 6 candles, not breaking this top, that would have been one entry, or 5-minute divergences, or 1 hour pin bar here. So, well, this 1 hour, there was a bit of a wick. Was it the perfect pin bar? No, it wasn't the perfect one. It was an okay one. Could have been enough for someone to short it. That could have been an entry. But the six 15-minute candles was very clear. 1, 2, 3, 4, 5, sixth candle not breaking this top. Even if it's the sixth or seventh, the entries around 143.15, 143.10, stop loss above it at 45, about a 35 pip risk. Target was more of 42. Went well beyond that. Actually did stop at 142, but then moved on actually all the way down to 141.30, and I fell for 130 pip gain. Risk about 35, so it was about a 4-to-1 trade there. Beverly missed it because she had to go out. That's a pity. Yeah, yeah, if that can happen, if you can't manage it and the fall already happened, there's little we can do indeed. And I didn't short it here either in this zone because it was too close to my target, but it did actually still move lower than that. So I hope some of you managed to get that trade. And I think it was a good turnaround. It was a good impulse here, but it was, as we analyzed, part of a downtrend. So once we see weakness in that impulse, it did fall very quickly and reverted back down. And Matos took that trade. Great. Awesome work. And so now I think it's pretty much the same situation as yesterday. Because we're still in that downtrend. We got one more divergence now because yesterday's fall was pretty impulsive, but not impulsive enough to bring the oscillator to a lower low. Price obviously making a lower low. So we got double divergence. And from that point of view, I'm a bit on the fence. Now, yesterday was a clear sell in my view. Today, I think there could still be one more sell, but it's I think a bit less clear. I from a wave perspective am hesitating whether this is already 5 waves completed, which certainly one could see on a 5-minute chart, a 15-minute chart, or whether this is still a wave 4 and we make one more wave 5. So from that point of view, I have a bit of hesitation, but in general, I don't like to trade with the trend if there is double divergence. That's often enough a bit risky. Not impossible, but certainly more risky. Single divergence is a warning signal, but depending on factors, still very doable to trade with the trend, especially on the hour chart. 4-hour chart or higher, single divergence is more valuable and more dangerous. So from that point of view, what would be the target if indeed price makes that retracement? If price indeed, uses that double divergence to retrace. So that would be the long-term moving average here, 144 EMA, coming in here about 143.20, basically going back to the previous top. That would be a potential. Now, let me add on some moving averages here to see where that zone is. Okay, it's roughly indeed, yeah, no new information right there. So basically, yesterday, once again, we had 2 breaks above the 21 EMA, and also we had 2 breaks below it. So that could have been a breakout trade as well there. Let's see, I think that it's doable. Even if it doesn't go back to the long-term moving average, it's still doable to trade to the downside. But I would like to see a similar scenario as here. I would like to see price move up, then down, move up, and then the next break could be a good break down to 140, the psychological round level 139.50, which is a big target on the 4-hour chart when looking at pretty big structures, or even the daily. If you look on the daily chart, this is actually a fib when comparing it to this leg. It's a 2618. There are a lot of fibs probably we can find in that zone, but that would be the next target, basically, roughly in that area. So from that point of view, there's two options, I think. A breakout trade, once again, if it does make a double dip, like something like here, above the 21 EMA, or if it indeed doesn't do that, but does this, makes an ABC zigzag, and then somewhere in here again. I would, in that case, put a fib on the first move up, like this. If it rises, hits here, pulls back to the 50 fib and starts to bounce off of the 21 EMA, then the target could be the 61.8 here at 143, or the minus 1000 at 143, 143.34 for downside again. Let's see. Beverly was thinking about placing an order, and had hesitated with that because was not able to follow the price. Yeah, and of course, in retrospect, it's easy to say, oh, I wish I would have done that. I didn't think about I didn't discuss that, should we use a pending or should we use a market order? I was just assuming indeed that that we would be monitoring that trade. It would have been a good question beforehand yesterday to think about indeed. It didn't cross my mind. For those that weren't able to monitor it, was it worth a pending order at that time? It's too easy. In retrospect, it's, I guess, difficult to answer, really. I really don't know. I guess yes, but it's always easy to say in retrospect, right? So I don't know how much that's difficult. The stop loss is, if you go above the top, is pretty big, though. If you put a pending here at a 50 fib, if you put a pending at the 61.8, you missed it. If you put a pending at the 50, you probably caught it. But putting a stop loss above the top is still pretty big risk. One could have maybe used the 61.8 fib, though. As discussed yesterday, here 143.70-ish, maybe 65. That would have reduced the risk, of course, to about 40 pips. That would have been maybe more manageable. It's possible. I prefer market orders, so I don't really focus on pending orders a lot, but could have made sense yesterday. Today, I don't think it makes sense because I think that before price gets up here, I don't know how long it's going to take. We got a lot of pound news coming up, so not yet, at least. I think it makes more sense if price indeed does this motion and starts to rise like this, and you know that you can't monitor it. Then in that case, after that, maybe it makes sense at that point with the stop loss. With the entry at this target and a stop loss some distance away from this top, for instance. But I think it doesn't make sense to do now. It will take too much time before that happens. And you never know with a news event, it could do this and then start to do this, and you don't want to have a pending order in that kind of environment, I think. So anyhow, at minimum, we need to wait for today's news event because if we go on a short here, it will take a pretty hefty price action to get it there. Now let me check the 50-minute chart again. Let's see. A breakout below this. It's possible. I wouldn't say that it's not possible to trade because although we do have double divergence, it could easily still do this before moving up totally. So I wouldn't say that it's out of the question that this cannot continue. It is a triangle and might still push one more time. But I would say that if it does break below this trend line, I wouldn't be too greedy on the downside target. I think 140.75 is probably all that we can expect, because as soon as this breaks, I don't think it's going to go far before we get another retracement, just because of the divergence on this chart. So that could happen, and I don't think that that is neither a bad trade on the 50-minute chart. From an hourly perspective, I would like to, see a similar movement here, like this, or a bigger retracement up to here. But on a 15, I can't rule out that this would get one more break, because this has a lot of momentum. It gets one more break to get divergence here before we get that bigger 1 hour retracement. So that is not necessarily a trade that is bad. The only thing that is a bit annoying about this trade idea is that when is it going to happen? Because we do have that news event. That is a bit of a question mark, especially because if a short is taking before the news event, and the news event might just do this, and then it could change the environment very rapidly. So from that point of view, it might be better to close the trade 10 minutes before the news event and try to rerun to after, maybe 30 minutes, for instance. That's something that, of course, is up to you, but just giving a guidelines here what could be safer. So that a triangle break could be a trade setup for intraday trading. The hourly would require more patience. And otherwise, I think I have nothing new to say compared to yesterday. It's once again very impulsive, very fascinating to see how price is really staying below that 21 EMA for so long. Yesterday too, that was a spike up to that 21 EMA, and boom, got rejected again. And quite fascinating, of course, as always, to see how that 21 EMA is being pulled away from the 144. Really beautiful momentum going on. This is day 21 in the meantime. That's away from this 21 EMA band on the daily. You can see this gap too. And look at the 8 EMA as well. Price staying below it all the way from here, or actually from here. And yeah, I think when looking at this momentum, that for the moment, I wouldn't say there's no reason to change course. I mean, as long as this keeps going, this momentum, any pullbacks, as I said on the hourly chart, any pullbacks to here, still very good shorting zones. I would say anywhere, if I put a fib on this very last downside, anywhere around 886, 78.6 fib could be very nice. Let me see if I think, let me just use this fib for a second. All right, we reached the target here. So if you use this fib, this is the 4-hour fib, and what we were using just a second ago was an hourly fib on this swing. So for instance, here we can see that this 50 fib, right, could be very interesting on a 4-hour fib when using it from target to. I'm fibbing here from retracement to target and only moving it. It hits the minus 61.8 target, and that's the top of the band as well. 38.2 fib could even be it. Anywhere in one of these two fibs seems most likely. Max 61.8 probably. All right, so that's the fibs. And I think I talked about everything now. We got one question here. Let's see. There's pound news indeed. And then indeed dollar news. Well, I was talking primarily about the pound news, but I think that the dollar news is also red tagged, so that's something that is something to consider as well. But it's still like 8 hours from now, I think. Let's see. 8 p.m. 5 hours from now. Okay. So I think the pound news, because let me take a look at that again. Unemployment rate and claim account change. Those are pretty big ones. These are, I'm not saying these are not big ones as well, so it's something to consider. 5.5 hours. Both are red tags, so they're both important. Let's see, pullback on the daily. Well, eventually it will pull back, definitely. Let's see, the bigger support level, as we said yesterday, was 140, but also the target here is minus 272 at 138.40. And it's difficult to judge. I wouldn't necessarily, unless it really gets to a strong fib or something like that. It's difficult to judge, how, if this is too much, what is too much. I don't know. It's definitely obviously oversold at the moment, but that always happens with the strong momentum, and those momentums can keep pushing. There are a lot of days below it already, 21 days, but could it be 24? Sure. I don't think necessarily a maximum that has to contain it. Let me say it this way, if you see what I mean. It's definitely eventually going to make a pullback, but um, I don't think that it has to be now. It could be the news event could make that retracement that on the hourly seems to be an option here because of the double divergence. But looking at the daily, I don't see anything on the daily that says, okay, this is, it's obviously has moved more than a few days ago. But other than that, well, I can use the let's see here. How many pips has it moved here? 1350. So if I use the fib sequence, we're looking at 233, 377, 610, 977, 1500, 1500. So if we subtract 1500 pips from this top 1600, we're looking at 138.50. 138.50 is the fifth Fibonacci sequence levels that I consider important on the daily chart. So from that point of view, we're getting close to that fifth zone indeed. And that's the main target for the moment. And let's see, 610 is the acceleration level. So subtract 610 from 150, 190, 148.90. Look at that. The third level is where we should expect the acceleration to happen. And look when the acceleration happened. Right below the third level. Right below this orange line. Boom. So you can see price really going from the third Fibonacci sequence level very impulsively, dropping below the fourth, right down to the fifth. It is difficult indeed, because it's moved so far, it's difficult and mentally not easy to say, okay, but you're still going to try and catch a trade in this train that seems to be picking up speed. It has to slow down and eventually. Difficult to say, okay, I've still tried to attempt it, and tempting to say, okay, I'll just ignore it, right? I guess where you're coming from, and I had many times the same in the past. Now a bit less because when these things start to roll, they like to keep going. So it's actually a pretty nice time to trade it. Now, eventually, I'm not saying we don't want to blindly trade it because eventually there's going to be some retracement indeed. But that fear, let's say maybe, or the insecurity about when that retracement can happen, can keep traders out of a move like this indeed, which is a pity because these do give a lot of momentum. Like yesterday, for instance, on the dollar CAD, and then we'll dive into some trades, folks. I know we're talking a lot about this pound, but on on this pound use this dollar CAD, remember that okay, it missed the minus 61 target by a bit, but the idea was to trade the target with the trend trade. And I did say, okay, watch out in this area. It could struggle because it could make, that's the only danger of that trade. It could make a bull flag, and then you'll get knocked out maybe, break even or loss if you don't watch out. But look at that, it didn't. So you never know with the trends. And that's why still attempting to buy a retracement like that makes sense, because you never know. It seems like it's going to make a bigger correction, but it didn't. It just made a new high again, right? And moved up from this target. Okay, missed the target by a bit, but the idea, I think you can see the idea behind it. From that bouncing spot here, 190. If you didn't, because it did miss the target by a bit. So if you had to take this hourly candle instead, right? You take this hourly candle because of the bounce. Still another 160 pips. And obviously, when price makes a consolidation trial like that, it could be good to go just below it, make it move to break even because of this risk, right? But it didn't. Made a small triangle, still broke to the upside. So that could have been a trade management decision to reduce the risk, have a free trade, and it would have worked out, that free trade. So that could be one way. It's difficult. I understand your thoughts though. So your dollar. Let's go through them. Your dollar at close to resistance now 110. Got the bounce yesterday. I said I didn't like this break. I don't like this move down. I think it might get down here. It didn't even get here, did it? I did it. Would have expected it to get down there, which because of that I didn't catch a long either. But I didn't take the short. That's good too. Didn't get into a loss there. Didn't take that break. Didn't like it right at the bottom of this range. Price bounce actually earlier still at these trend lines. This trend line at least broke a few of these trend lines, but didn't break this one. And reversed, and now it's back at resistance, too close to 110, needs to break above 110, I think, for price to get to 112. With a small little side note that 110, what is this? 110.75, 111.25, those are some bottoms on the left as well. But I don't expect a major concern about that, but something still to keep in mind for potential trade management decisions. But ultimately, I think that the real target should be 112, which is the minus 272 target. But still, something to keep an eye on this zone as well. So it's not going to be an easy trade. I don't know if, it sounds good to me, this zone from 110 to 112, but because it's so choppy, practically, I'm not really that sure about how tradable it is. And how I would want to trade it. I'm not going to jump in a pending order. I'm not going to jump in the long as soon as this breaks. I can only imagine me really just monitoring how it breaks. If it makes some bull flag, and then I'll take the next break. That's the only thing I can imagine at this moment that might be tradable on this euro dollar. I don't think a pending order above these tops is wise, just because of the overall structure here. So the only thing I could do is just wait for it to break and then look how it corrects and if that makes sense to trade continuation. Now, for those of you who are more into perhaps reversal trades with 110, yet another short to consider. Yeah, that's true. I'm not sure, Criso, to what your comment is referring to, but there are a lot of potential resistances one could draw. Indeed. Here, let's check them. But they're all around 1010 here, as you can see, 1011, 109.90. This top is at 110.60. Yeah, so from that point of view, there are a lot of lines that could be a hinder. Is this worth it? Maybe. It would have to definitely show, obviously, like this, some 5 hours, maybe hourly candles. on this this hourly candle, that hourly chart, that could be a signal of another retracement back to support. It's possible. The only thing we got to watch out is that it's showing an ascending wedge pattern as well. And ascending wedges are bullish patterns. So although it could still bounce here, move down, the expectation is that it should break. If it keeps making this ascending wedge pattern, then the expectation is that it should break up. So maybe one more bounce, maybe not. The next one, though, if it does bounce, it probably will break eventually. There's a good trend line on the weekly. I'm not sure if you're talking about that. Let's see. You're talking about December the 7th. I'll go to that in a second. There's a good trend line with connecting these tops right here. You got 3 hits on that. That's a resistance trend line to be aware of. But I have a bit of a bias on that. I don't think the next 3 months will get the break. I think that this consolidation will last. I think we'll get a bit of a break here. That's my bias. And somewhere in April, I think we'll see the downtrend continuation. But definitely, it's a trend line to keep on the chart and keep an eye on that. Absolutely. Let's see, December 7th. Let me go there. Daily. We could connect these tops as well. That's a bit further from here. And December 7th itself is probably referring to these tops, I guess. These resistances, yeah. That's a pretty big minefield at the moment. So let's take a look at some other pairs. It's really not a pair that's moving that much. The dollar's not moving, and the pound dollar is, but it's primarily the pound really, not much the dollar. So let's take a look at the dollar yen. Yesterday got that bit of a bounce, didn't break this resistance trend line, and bounced here to the downside. Broke some support, now breaking through this bottom. And that's basically a trade I was potentially interested in, bounce straight to the upside. But now that it broke this bottom, I lost my interest. We do have a pin bar here, but I lost my interest after it broke this bottom because I saw this as a potential ABC 1, 2, 3 retracement and then up again. Would have been interested in that, but now that that bottom broke, something else is happening here. It's still at its support levels on the daily chart like this, but it's pushing through these bottoms, which makes me more cautious. And I don't see any trade here. I don't see an upside trade as yet. I don't see a downside trade because it's too close to support. So let's move on to another pair. A sell after a pullback, maybe. But I would like to see, personally, I would like to see that in a triangle at least. And in general, I would still probably prefer other currency pair just because of this support level close by. But if a triangle is there, it is better. What else did I want to say? Let's see. I don't remember. Well, anyhow, it's something I'm keeping an eye on, obviously, but from my perspective, the chance that it could bounce at the support is too strong. I would rather wait for more info there. All right, pound yen. We talked about it yesterday. It has moved away. We talked about the zigzag and that it could turn at these targets. That was a nice turnaround indeed, falling a couple hundred pips. The pound yen moves quickly and with a lot of speed and is falling to new lower lows again. Moved up right into this zone that we had, as you can see, zigzag correction. And now it's keeping this 4-hour candles. Look at this. This is a 4-hour impulse. So the only way to trade 4-hour impulse like that is I think looking at a smaller time frame, or even waiting for a retracement of this 4-hour candle. At this moment, this candle is open and pushing. So one way could be, if you want to trade a 4-hour impulse, just a retracement of this candle a bit, and we might not get it. We might get yet another 4-hour bearish candle. But there've been already a couple in a row here, so let's take a look at that 50-minute chart. I think this is pushed a bit too far in the meantime. Let's put some fibs. Alrighty. Let's see, 61.8 target there. All right. I think that on a 5-minute chart, it could have been a small breakout here. I'm unfortunately a bit too late for that now at the moment. After talking too long, I guess, on the dollar yen and pound. But yeah, that could have been within the 4-hour impulse still an addition here because we got a bit of retracement. Now at this moment, I think we need just a similar retracement at least. I don't see how jumping in here would make sense from my perspective. We got new pivot points, and obviously there is a bit more space now to the downside because of that. But I think at least waiting for a bit of retracement on this hourly candle is a better trade. With a stop loss probably above here, could be enough for continuation to the downside within this impulse. All right, Euro Yen. Nothing much to say really. It's at the bottom of this triangle. Didn't like it yesterday. I still don't think there's. I mean, there could be a break obviously, but if it does break, I would wait for a pullback in any case. I'm going to check if there's something more interesting. Let's take a look at Aussie. All right. Aussie was a trade that, could have been at the minus 272 target. We talked about these targets being a good entry as well for the Aussie. So if you manage to catch the first target, that's great. And it fell nicely. And I personally think that 69, putting the stop loss above 69 makes sense. And if this 4-hour candle closes to put it above that high at 68.77, just keep trailing this 4-hour chart. The reason why is because we don't know if price could make a bounce here. And in that case, there's some profit locked in right there. That's the profit then. If it doesn't bounce, then that's great because then it will get more 4-hour bearish candles and we can keep moving that trail under each bearish candle. That's why I would personally use a trail above these candle highs, just in case it bounces here. Will it bounce? I don't know. Is it worth trading? I don't think so. But it's worth guarding against if in this trade already from this target. All right, if you're not in that trade, I don't think there's really much to do here at the moment as well. Let's take a look at this 4-hour chart. It could be a 5-minute breakout at this moment within the, right, maybe just a tad higher, but you get my point. It was pretty close to here, which wouldn't be bad, normally speaking, I think, within considering the downtrend. But this is just a tad too close, maybe to 68.40 here. Again, this bottom. It's really only about 12 pips away. So if it were not for that level, it could have been a good five-minute pullback and break continuation. But I think better if you're not in that trade, still to wait for a bit of a pullback. Let's see what we can expect. If anything else, we never know if we get the pullback, but if we do, let's put the fib from, let me check this. . 68.80, so 38.2 fib on the 50-minute chart. .6880. Let me take a look at the pivot points. 68.88 is a pivot, so that could be a good resistance zone. The 50 to 38.2 fib. I think that's probably needed before a short makes more sense. Or if somehow price, obviously can break through this zone. Let's take a look at the downside pivot points here. 68.19. If it breaks below the bottom, then maybe intraday continuation to these targets. That could be possible. For instance, a break, we see a bear flag like this on a 50-minute chart, and then that next break. That could be something as well. Nothing right now, though. Let's take a look at the Kiwi. This is the wrong template. Again, pushing two lower lows. So we got two options here. We got one is trading a pullback on these 4-hour candles, waiting for this 4-hour candle to retrace for follow through. Let me check the 5-minute chart. I'm not sure about the Kiwi at this moment. I think that the Aussie looks better. Let me take a look at the odd New Zealand here. There's a bit of divergence. Actually, the odd is strengthening. So maybe the Kiwi does have more merit. Let's see. Daily is a triangle. 4-hour chart is still a mess. 1 hour is up. 15 has a bullish impulse, so that means Kiwi has a bit more weakness. Let me take a look at pound odd as well. Pound odd breaking actually to the downside yesterday, not to the upside, because of pound weakness, just missing the 78.6 fib, unfortunately, and bouncing back up. Nothing at this moment except this trade to the upside, I would say, this break, but that will take some time. Euro odd, steaming to the upside as well. Euro New Zealand and pound New Zealand. They all seem to be, making substantial moves, but it seems to be all kind of in the past. At this moment, they have made already quite a lot of movement. And I'm not talking about larger time frames, but I'm talking about smaller time frames too. So, well, that makes it a bit difficult. I'm not particularly a fan of, jumping in a trade when several breaks has already happened on several time frames. And yes, it could push a bit more, but I think that it's not the ideal place, obviously. And I think that I rather, to be honest, just rather wait and look for a bit of pullback on these time frames at the very minimum, and then perhaps continuation. So from that point of view, I don't think that there's anything going on right now that seems to be interesting to me. But maybe in the future we can talk about that a bit more in more detail. Which pair could be the best later today? Um, Perhaps after the news event on the pound, perhaps after the dollar news event. Unless you see something I missed, is there any maybe some currency pair that seems interesting to you right now? Is there any pair we did look at and you say, well, actually, I think that this could be interesting? I would gladly take a look at it. I don't see any setup that seems interesting right now. I think the pound yen could have been one maybe for short term, but I missed that. So dollar yen really accelerating at the moment. Wow, this is not a. I really expected a break. He was really looking for a bounce. Didn't happen. I'm a bit lucky that this pin bar didn't happen above this top, because if it would have happened above this point, I probably would have traded that. So that's good for me. All right, I don't see anyone having a preference here. So it's interesting to see the dollar weakening so much again against the yen, whereas the pound dollar is moving down as well. They're really almost going in tandem together, pound USD, dollar yen. It shouldn't really, on average, they're not, should be the opposite, right? But we're seeing pound weaken and we're seeing yen strengthen. And that's why we're seeing a pound yen that is looking like this as well, which does seem similar like to the pound USD, but even bigger because this has moved a ton from 187 down to 164, but getting close to 2,500 pips. So I think pound weakness. I mean, we have to see how the pound news event behaves. I think it's definitely a trade that makes sense. Not pound odd, because that's one of the few that is still in this triangle. And actually, if you look at the daily, it's still in this bull flag pattern. But the pound dollar, pound yen could certainly be still, ready for new shorts if a good pullback presents itself. I'm trying to see what kind of pullback qualifies. We have to see what price does with the news event first of all. If it just the news event just sends it lower, sends it another 50, 100 pips lower, well, it's going to look totally different, this chart, and we might have to wait for some triangle or something like that before a new short. If this news event were to make it send higher, it depends how high it brings it, right? That's a bit difficult to say. now, but if it breaks this high, this candle high, I would probably put a fib on the entire move. Whereas if it doesn't break that candle high, basically I would still keep the fib on this swing high probably. That's the 4-hour, or this maybe. All right, so I think these tops are pretty important. So the pound, basically, I don't think it makes. It really depends on how this pound moves. I think it's too early to talk about all the different scenarios, but pound could be still yet again a good short today. It really depends on the news event, but after that and later today, it could still be good for continuation. Eventually, this pound is going to retrace. I think even this week it could make some retracement, so got to be careful of that. Other than that, we can take a look at the Swissy. Sure, let's do that. Hang on. Oh, this is the weekly. Sorry. Okay. Let me get. This is a bit too many moving averages for a moment. Let me. All right, folks. Let's take a look at this. Got a bullish candle 2 months ago now. Last month a bearish one. If we go up for this zigzag, we would say the 272 target is the main place to go. 106.60. We broke out of this triangle. It's a long time ago I looked at this Swissy. I don't look at it daily anymore. This triangle broke. We got a hook back, so we could put a fib from here to here on this little breakout here. What do we got there? Price bouncing off of 61.8. Let's move into the daily now. All right, daily, everything is aligned to the upside. Moving averages are upside here. So let me get rid of this pink fib. Keep this orange fib on the daily. So I think that we had to bounce up to 61.8. If price does move lower, there's a bit of a triangle right now actually. So if price breaks below it, it could move down to the 78.6 fib, which should be a bouncing spot again. And if it breaks the resistance, there should be some space up to the top and the target. Let's take a look at the 4-hour now. Now let me use the moving average template. Yeah, I think that there's a decent chance, from my perspective, looking at the moving averages, that if it breaks this fractal, that we're going to be in an impulsive territory here. So I think the best, environment would be for upside if we break above this 108.80, I guess. What is it? Let me check. Yeah, that could be good for upside trades. Until then, I don't think there's really anything to trade. There could be within this triangle perhaps still a bounce. Let's take a look. There's a trend line here. Let's see. It could still be worth maybe looking for a bounce somewhere in this zone. Probably not below this bottom anymore. Let's put a fib on this correction like this. All right. This we got targets at 99.50 and 99.80. So one of those two targets, I mean, could be a good bouncing spot. We got support where, okay, we're in this range, but we're at the bottom of a triangle. Could be a good bounce trade. And if this does turn and it does break above 108.80, there could be, pretty good upside potential there. Stop loss would have to be, in my opinion, if I trade this, I would put it below 99.50, probably at 99.40. I'm not a big fan of the dollar Swissy last few years in a way, but this doesn't look that bad, I think. Someone had a question actually about dollar CAD, I remember now. Sorry about that, Sandeep. Do you think dollar CAD will be back to normal level 143 after the rate decision today? Yeah, the dollar CAD is in a huge upside. I really have no specific thoughts about how far the rate hike or the interest rate decision today, there's probably not going to be rate hike, sorry, could bring it. I think that at the very minimum, if we put a fib on this weekly candle, from a technical point of view, it bounced off to 23.6 fib. If it does retrace lower, the next fib is 38.2 fib at 143.60, for instance, here. It's reaching the minus 272 target as we speak. So if it does turn around and fall, I think that that could still be a bouncing spot for a move up to the minus 61.8 target. The other option could be a bull flag and then a break up to that target. And obviously the next option could be just a continuation right up to that target. If we go down to the 38.2 fib, then I would expect an ABC zigzag, bearish, corrective, bearish, and then a bounce like that. And the minus 61.8 target will probably equal the 38.2 fib. And I would put a fib from here, from the top to the bottom of this zigzag like this. It would probably go up to the 61.8, then move down, and then go up again like this. Sorry, probably more like this. So yeah, from that point of view, 143-ish could be possible if we get a zigzag like that. Ah, great. Sounds good, Beverly. I think that 99.56 seems I think okay. I think that that should be fine indeed. Let's see. I had only that target there, but otherwise, I think probably there's a good chance it could bounce off this target too. Great, Morton. Thank you so much. Good to hear that. Have a good day as well. I think, from my point of view, maybe we can only still take a look a bit of at these exotics and maybe some instruments. And otherwise, I think I, you know, don't have much to share actually at this moment, because from my point of view, they're kind of all these currency pairs are a bit at a place. As I said, I'm not really looking to trade them right now. Maybe after retracement. Let's see, the euro pound is also moving up a lot. Getting close to the long-term moving average on the weekly. And here again, the same principle at work. Double dip, leads to a good second break. CAD yen definitely falling a lot as well. CAD weakness. I mean, we see it with the dollar CAD yen not doing bad itself as well. So you can see the CAD Swiss seals, the CAD yen, excuse me, also doing a very nice acceleration. And it was a bit the same as the pound yen yesterday. Really nothing new to examine here. It also got an APZ zigzag up to the long-term moving average within the downside impulse. Good turnaround. So it's the same trade as the pound yen, really. Let's take a look at some of these indices. Let's see if there's anything going on. Price right at DAX bottom. That's going to be interesting. $28.70. And that is levels that we haven't seen since 2000, probably 5. We don't even see it on this chart. What kind of level could be a bounce? Let's take a look at this fib. From a technical point of view, at least, minus 272 target at 2670. I don't know. I don't use fibs as frequently on oil, so I don't know how much it respects these fibs. But that's my standard technical analysis that would look at this target at least. But quite impressive. Let's take a look at gold. Is still slowly going down in a bit of a channel here. Silver too, really slowing down in price movement as well. S&P, very bearish so far, very bearish start of this year, and right at this bottom. And I would not be surprised if this bottom breaks. It's actually looking very similar to the dollar yen, isn't it? Also right at this bottom. And I wouldn't be surprised if it breaks. I think that when looking at my time factor rule, it was already saying, let's see, 1, 2, 3, 4, 5, 6 going to break, especially the 7th as well on top of that. Not breaking this top. So it looks like that momentum to the upside on those indices is over. Had a good momentum here. And so far this month seems to be kind of confirming that that time factor rule so far. Now it could still bounce. I'm not saying it couldn't bounce here and maybe make a retracement, but I think it's a pretty decent chance we're going to get a bigger correction of this swing high, swing low. So the next fib could be the 1730. And if it breaks that, then it's down to the 50. I have a fib on this swing high, swing low. On gold, 78.6 fib is 94.60, 946, sorry. But it's kind of slowing down here, so I'm not sure how long it's going to take. It could be a very slow ride down. It seems like the other commodities are a bit more bearish. Got a channel going on like this. Oh, so 946. No. A 946, I guess, is that fib. But let's take a look at some other things. We have some tops in here that could be important, around 1,000. Psychological level as well. We could put a fib on the downside too. Let me get rid of this, which is this fib. What does that say? Also 1,000, which is a 272 target. We got some divergence on the weekly chart. That shouldn't be underestimated. So maybe this downside does not really have that much left. Low is 1,040. So perhaps if, we don't even know if that's going to happen, but I'm not too sure how much downside this really has left. At this moment, this price action looks very choppy, very corrective, and it's still pushing with the lower low, but there's divergence. So it would have to probably really, I don't know, somehow miraculously accelerate this to the downside, break below 1,000, but I'm not that seeing that much space, I think, at this moment to the downside. Upside, neither, because it's in the downtrend, it's in this channel. So for the moment, I think neutral is probably the best way to go. I don't really see anything that excites me on this gold. It just it's pushing lower and lower, but no real interest here at the moment. Yeah, these yens are really, all of them are moving down nicely. A lot of yen strength at the moment. And I didn't like the dollar yen, but the others are moving as well. So let's see, maybe which yen could be the best one. I'm not sure. As I said, the dollar yen is still not a big fan of it, even though it's moving it down a lot. I think pound yen is pretty good. After the news event, euro yen, perhaps it's breaking this triangle. Could be an option, but still, I think pound yen has the best papers. Obviously, pound is in a big downtrend. Let's see, CAD yen. CAD is very weak as well, but has the interest rate. Otherwise, CAD yen could have been an option. We see Aussie and New Zealand weakening as well, so that could be an option. Sorry. Let's take a look at the Aussie yen again. Let me put some fibs on. Let's see this move here. Maybe even here. First of all, let's see 61.8 target hit. And we're at the target again. Yeah, it seems like I still think that a pullback makes the most sense, probably from here to here, put a fib on, and wait for price to get up to the 50, the 38, 61.8 zone here. Now, this doesn't have to be the turning spot, so obviously if it moves lower, I'll be just adjusting this fib. And I think we can get one more fall. Let's take a look at this fib, 50 fib. So we're still about 130 pips away from this target. So yeah, I think that if price makes that retracement to about a 38 2-point fib, I have no idea if it's going to happen, but if it does, there's still plenty of space down to this bigger target. So something like this looks like a good trade to me. All right, but now at this moment, and I think that this is a bit too late to take a trade right here and put the risk, even if the risk is put here, I don't think it's worth, uh, you know, the R2R is about 1-to-1, which is could be okay, but I don't think it's a right moment to jump in right now. Could have been on a 5-minute chart, like the pound yen. That could have been a bit different, but that's a bit too late for that, unfortunately. So, all right, I think there's nothing new to add. So tonight, Nenet has his webinar on. Let me take a look. Where's the webinars? Here we go. We got a webinar on from Nenet about the psychology. He's going to take a look at how to basically reduce that gambling side on yourself to get a bit more risk management into your trading. Tomorrow we're going to take a look at fibs, some advanced methods, how to use this tool. So hope to see you in these webinars. It's the same time today, 5 p.m. GMT, tomorrow 2. So that's the schedule for this week. Thanks so much for joining today, and wish you good trading, and hope to see you soon. Cheers, folks.